Hello, Discord members. So this week I thought I would make a little educational video just talking about how I come up with my daily, hourly levels. Okay, this is something that just comes from screen time, practice, and you get used to repeatable style. And in my case, this is how I like to start analyzing every chart. Let me just move this up here so we can draw on the screen here. This is how I like to start any fresh analysis for any chart. This is just a gold chart. So I'm just going to use gold as the example and show you like how I come up with all the levels. But first, let's talk about confluence factors and things that I use, okay? So over here, I have a list of 5 things that I like to use. First, I want to see the number of touches that a level gets. And by number of touches, I don't mean just from one side, I mean from above and from below. Because the more a level is tested from either side, for me, that gives it more validity. So if we have a level like that, and then we start coming and getting some nice tests, but then we break and we start respecting this level as well from the other side. This for me adds validity to the level because I can tell that, and this is applicable also to any time frame. If you're a swing trader, you can be applying this on weekly, daily levels. If you're a day trader, you can apply this to hourly and 5-minute levels, etc. It's all in context with what type of trader you are, how long you're looking to hold trades, and then if you're looking, again, to swing trade, day trade, take scalps, etc. So the amount of touches I see from either side respecting, that is the first element that I like to focus on. Then, how recent are the hits? So this is pretty self-explanatory. We can have a level that, has had touches in the past, but if I see that we've come recently and respected this level very well on recent tests, let's say the chart is here at the moment, then this adds more validity because obviously price is very close to where this level is going to be at the moment. Then the strength of the reactions. If I have a level, but I see that price comes into it and all we do is chop around it a lot of times and just basically ranging around it, this to me loses its its importance. I want to see price come to the level and have a strong break away, come back, and we can break through the level, but as long as I see we get nice clean breaks and then we come back and again we have a nice rejection from these reactions, the magnitude of the reactions is going to be another element that I'm going to be looking into. I don't want levels this price is just chopping and trading through it a lot. Then, how clean the breaks are. I just mentioned this before, but there is something that's pretty much called, or that we can call clean or untouched levels, where basically if we have price consolidating below a level, let's say we're putting in like an ascending triangle here, and we have a breakout, let's say this is the hourly, and we have a clean breakout with no immediate retest, this to me is a very nice fresh level, okay? Because we had a breakout. If we did something like this, and then we go, it may still hold on a pullback to this level, but it's not a fresh level because we've already retested it. Now, obviously, if we're looking at the 1 hour time frame and then you go into here and you start going into the 5 minute, the 1 minute, probably you got to retest on like the 5 minute chart or the 1 minute. But I'm basically talking about a clean break in the time frame that we are focusing in. And then finally, if we get a rounded retest, so if we have a good amount of time between tests, so if we have market coming up here into a level and then we break out, if we break out and then 1 or 2 candles later we're back testing it again, this could be considered like a V reversal or even like a fake out on like a higher time frame. Like if this is a 1 hour chart and we look at this on the daily chart, we're going to have the level and all we're going to see is one big wick through the level. Okay, so we want to see a breakout, and then ideally I want to see price break out from the level and spend some time away from that level and then come back to the level after a decent or a good amount of time has passed by. So if we have the combination of a clean breakout plus a rounded retest back, this gives us very good conviction that this is going to be good levels as well. Okay, so with that said, if we go here on a gold chart and we're saying, okay, let's start analyzing this chart. This is a naked chart, no volume profiles, no nothing. But as you're going to see, these levels will most of the time coincide with low volume node areas, because pretty much that's the definition. Where we have a volume profile, low volume node areas are areas where price either rejects from or trades through very quickly. Okay, so if I just start looking at this chart and I go and I take a horizontal line and let's go from bottom to the top. So immediately here, like I start looking, and what do I see here? We had a little bit of resistance, a breakout, and then we had this nice back test, and then market started pushing up. And if I look at this level, right around there, and let me make it into my daily template, you can see very nice confluence where we had resistance, clean breakout right here on the daily, and then a long amount of time passed. We came back to this level, tested it perfectly twice, and then we had a very big reaction of that area. So this would be the first daily level that I am looking at. Okay, now another thing that I like to do, and I'm going to talk about this when we get over here, a lot of times people are taught to always mark their support resistances at the very extreme of the wicks. I myself, I like to look for confluence. If we have this cluster of levels like we have on the daily, instead of marking this on the very edge, I'll come down and put it right there. So as you can see, I pretty much put it at the lowest of the wicks. So that way this daily level encompasses all three direct hits from this candlestick instead of just having it only on the very top. Okay? And then if we go back and look at the charts, you can see that in the future, this proved to be a very nice retest here before we continued to all-time highs, and we retested it again recently. But I see here we have several wicks of resistance that are not catching this level. Now here, this is where you can apply, you don't need to use just one line. You could do this as a zone, just like I do on my weekly charts. You could just take the rectangle tool and you can say, okay, I'm going to mark this entire area as a support zone. And that's perfectly valid. You can see you have resistance, 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 support, okay? For me, I just use the lines by themselves because I have my low volume nodes marked on the lower time frames. So I don't want to have a ton of drawings on my charts. But again, with a zone, you can capture more confluence of hits. What I would do here and what I have on the charts that we're using is I'm going to move this down to capture this wicks on the resistance side as well. So by moving this line down a few points, now I'm catching all these highs here. I'm almost catching here. I'm catching these two resistances, and then I'm catching the back test off of the breakout, and we got this one as well. Okay, so that is my logic for how I apply this. And then as you can see, here I'm applying several concepts at once here. I'm applying the number of touches, the strength of the reactions, and then I'm also applying the rounded retest principle. Obviously, if I go into like a lower time frame, this was a very nice retest. If we go on an hourly chart, you can see this level. So we did actually get a little back test here, but we had a very nice rounded retest back to this level, and then the reaction from there. And then continuing up to the top of the chart. If I go and take the level tool again, we have same scenario. We have a cluster of resistances. So I could put this on the very top, but then I got 4 daily candlesticks here, or at least 2 right here. The first 2 ones that are not touching the level by just a few points. So instead of putting it at the very top, I'm going to put it right there. So if I zoom in, I basically caught most of the precise touches from this consolidation before we had the clean breakout. And then here, we did trade through that level, but then you can see last week we back tested it and respected it very, very well. So this recent hit has been a confirmation that this level, even though it was traded through here, it's still getting respected on future visits. So that's why this is still considered for me a very valid daily level. Okay? And then on these recent areas that we are here, there are several options. Originally, I had this level right over here, okay? And this is good because this is where we had all the most number of recent hits. But I also saw that we're missing this rejections here on the top, and we're missing this back test before we made an all-time high. So I decided, let's move this up to this wick. That way we're catching these two resistances, the gap up with the back test. And you can see last week, we perfectly tested this level as the high from last week's profile, okay, and candles. This candle was Wednesday of last week. So again, this added validity. Now, this level, we could even have two daily levels right here, 51.11, 51.44. That's perfectly fine if you want to do that. But for me, on the lower time frames, I can refine this and just put a level that's a little bit more refined on the lower time frames right over here. And then the last level that I have on my charts, which is very, very clear here, that I skipped, but we'll get back to this, is right here. Market was making clear level of resistance, ascending triangle, breakout, perfect rounded retest back into the breakout of the triangle. And so right here, I just look for the most confluence of highs that we have. If I would put this at the very high, I'm missing these two tests. So by just moving it down to to the lowest highs here, now I have more number of hits, and then we have a perfect back test after the confirmed daily breakout and a very precise back test on this rounded retest again into the level. And now, if we go into the hourly, let me put this visibility on the hours. Okay, this is right here. So you can see this is the level that we were talking about on the daily, where we were printing the ascending triangle. And you can see this breakout on the hourly was a very clean breakout. No immediate back test on the daily or the hourly. Okay? And then you can see right here, if this would have broken out and retested back here, then this would not have been a fresh level. But as it was, we held and held here, had the little breakout, and then the next day, wicked right back in, filled this fair value gap into the level, and we had a very nice reaction from there. And then for the hourlies, obviously with the hourly charts, I'm not going to go as far back into the past as I do with the dailies. For me, if price is here right now, there's no point in putting hourly levels like down here for the moment because we're so far away. So I want to focus on the most recent areas of price action. Again, continuing to use the same principles that we were using right here. So for example, this latest level that I added on the hourly, which is close to this daily level that we were talking about, I'll go into my horizontal line and I'm going to change it to my hourly settings. So basically it's a gray level. And so if I go to my most recent charts, I can see on Thursday we had this consolidation in Asia and Europe, breakdown, perfect backtest on Friday to close, and then we started rejecting. So this is the most recent important daily hourly level that I have. Again, looking for the most confluence of hits. Like if I zoom in, I could have put this right here, which is still obviously valid. But since we have so many wicks up here, I'm going to just push it up a little bit to get a lot more confluence of hits. So like right there is good. And this is also confirmed by two very precise touches that we get on this side right over here. Okay, so that is a good hourly level. I like to do on all my lines, I right click on it, visual order, send to back. That way it's not going to be covering the candlesticks. Okay, then from here, if I zoom out and start looking to the left, I'm start seeing clear area of resistance here that we broke out and we back tested that area. So then I start looking, okay, where can I find confluence for a good support resistance level that is getting respected from either side with strong reactions? And so by going back here, looking right around that area, that's a pretty good level right there. We have lots of support respected here on two days here, 2 consecutive days. Here we did chop through, but like I said, for me it's okay to chop through a level if we then start to respect it again once more. Here resistance, resistance, breakout, big rounded retest, and now we've got very recent confirmation that this level is indeed still valid and getting respected. So now if price has a strong break, a clean breakthrough, I will pay attention as a resistance flip from the other side if we come back into it. Okay, and let's do one last level. This right here, immediately my eyes are drawn to this area where we have support, a breakthrough here into that daily level. We reclaim this level, and then we have 3 hourly candles respecting this area once again. Okay, so this is a classic example of a break below support resistance for a reclaim. And if you look at the images that I have from the volume profile, you'll see that we have a nice high volume node right here. So there's a lot of confluence here around the low volume node area as well. But just purely looking at this from a price action perspective, I can look for the most confluence of hits on the wicks here. So probably a level right around this area, right around there, 48.27. I think I have 48.20 on our template on the screenshots. That's because I used right here actually this retest, yeah, like 824. Again, all these levels, I'm talking about differences of just a few points, which in the scheme of day trading, a few points is not going to be a huge thing. And again, like I said, if you want to just use zones to have a more general area, you could just draw this as an entire zone like we have here. But again, this is what I do with my low volume node profile, with my low volume nodes. That's where I highlight, and that's where I catch all those levels together in confluence with the horizontal levels. But you can see here, support, resistance, support, support, breakthrough, recover, support again. So if market starts breaking down here, this is the next area or the next big hourly level that I will be looking for. Okay, that's pretty much it, guys. Hope you enjoyed the video. That's the process that I use in order to identify good levels of support and resistance. Again, this is the first step that I take, and then I apply my volume profiles. I refine levels, identify my high volume nodes, low volume nodes, etc. But that is the key factors I use for support and resistance.